Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, CorpDevWestCoast shares his path, experiencing several 6-month-long internships during undergrad, to landing in portfolio management at a firm that deals exclusively with ultra-high net worth clients. We learn about the investor allocation or fund-of-funds world, the ugly side of wealth management, how he showed a genuine passion for PWM to survive recruiting, as well as what came out of over 300 plus applications he submitted online. Listen to why he decided on an MBA and the importance of optionality early in your career. Enjoy. All right, CorpDevWestCoast, thanks for joining the Wall Street Oasis podcast.
Yeah, thanks for having me.
So it'd be great if you could just give the listeners a short summary of your bio.
Yeah, absolutely. I grew up on the East Coast, but made my way out to the West Coast about 7 years ago. I've had kind of a long, varied career in finance, it feels at this point. I started out working at a sort of ultra high net worth investment advisory, got my CFA during that time, then went back and got an MBA and kind of found my way into the CorpDev world now. So living in the Bay Area and enjoying the CorpDev work for sure.
Cool. Okay, let's start all the way back at undergrad. So you're on the East Coast, you're going undergrad. Are you thinking, you're in a business program, so like you're kind of always kind of had a bent towards business and finance and that type of stuff? Or what was the thought process? Was it like family pushing you there? Or were you just naturally?
Yeah, I definitely knew that I was interested in business. I knew I wanted to go to an undergrad business program. I think I was probably inspired by like the economics class that I took in high school was probably my first foray into it, and realized that this was a science that I felt like a much more of a tangible relationship to. So I knew I wanted to do business, but I kind of thought I wanted to do marketing first. And lucky for me, I went to a school that is kind of a 5-year undergraduate program where it's called a co-op program. So you end up doing 3 different 6-month internships over the course of the 5 years of undergrad, which is great because you get to kind of try out different fields over the course of those 5 years. So I worked at an ad agency in New York City for my first 6-month internship, like really enjoyed it. I thought I wanted to try finance after that. And went to a fund of hedge fund for my second internship, also back in New York City, and kind of fell in love with the finance world, and didn't look back to marketing really after that.
Tell me about what was the agency like? I'm just curious because I don't know anything about that. Was it like a large agency where you come in and you're like a grunt and you're helping just do whatever they ask you to, or were you actually working on accounts and like doing real work?
Yeah, so I was in, there were 4 classmates of mine scattered in different groups. I was they called it traffic, which is really like project management in the agency. Okay. I thought it was a cool internship because I got to see every different department, but my job was basically to keep everybody on schedule for the advertisements that I was working on. So I'd go to the art director and tell him I needed something, by the next day at noon so that the creatives could review it. And it was kind of an intimidating position to be in as I was probably 19 and having to corral all these ad execs into finishing their work on time. But it was a really cool, kind of crazy environment right on Madison Avenue in New York. And
was it digital,
really
or was it like TV, print, and everything?
It was mostly print. Mostly like direct mail and stuff like that.
Old school.
The advertising world. Yeah.
Well,
the advertising world is kind of
direct mail is really fast.
Yeah.
That's where a lot of the best copywriters. I mean, because they're able to split test so much with basically the codes that people enter into, like where you heard this or whatever, because they would split up the codes on little mailers. It's really interesting, the whole split testing. That is basically it originated with like those mail order catalogs and all that stuff. For those that want to geek out on advertising and marketing.
it was a cool world, and I definitely felt like I learned a lot of just like how to act in an office and how to manage my time and how to it's my first sort of desk job.
Did these people blow you off since you were 19? You're supposed to corral them, but did they just blow you off, or were they like respectful?
Some did. Some definitely did. Others were. An ad agency, like, it tends to be very young. Anyways, like, I thought a lot of these people were like really old and senior, and looking at it now, they're like 23 and 24. And no, I mean, it was most people were respectful of the deadline. They knew that if that I was just the messenger, and that someone else would be coming if after me if the work wasn't done on time. But it was a cool environment.
So you followed that up with the next summer. You said hedge fund of funds, again in New York, right?
Yeah.
So you kind of fell in love with that. What about that was kind of so different? I mean, it sounds like the first one was kind of like fast paced and stuff. What was the fund of funds like day to day like?
Yeah, so I had this kind of wild experience with the second internship, where the fund of fund that I worked for had an allocation to Madoff, which in the second month of my internship, all the Madoff stuff was hitting, the front page of the journal and exploding. So like basically when I got there, we realized that, call it like a 6 or 7% position in the fund of funds, like, was just getting written down to zero all at once. And the fund of funds name was all over, all over the news as one of the groups that, that was kind of wrapped up in this scandal. And if you're a fund of hedge fund, you have one job, which is like, don't invest in Madoff. And so over the course of the 6 months that I was there, AUM at this fund of fund probably went from 15 billion down to 7. And it was just a wild ride. So, I mean, I think, it was also stressful, also fast paced. They kind of tossed me around from group to group, working on various things. And I ended up kind of spending most of my time in the investor relations group, which understandably needed the most help at that time.
So like, what were you doing like day to day when you're helping draft copy, like emails, like what to the press, like what is investor relations in in that sort of emergency fire drill setting? Like,
yeah.
And how long was the panic? Like every day, like you guys were seeing redemptions come through, and it was just like trying to stop the bleeding. What was it like?
Yeah, exactly that. There were just redemptions after redemptions coming in. So, I mean, a lot of what I was doing was just processing redemptions and responding to client requests, like, what does my balance look like now? What's my lockup? When can I get out? That sort of stuff. And I think probably 3 months into the internship, they tried to put in place kind of an offer to investors to kind of stop the bleeding a little bit, which they were going to buy back the Madoff position to anybody who wanted to sell it at 50 cents on the dollar. If you took that offer, you had to agree to like a lockup period.
Interesting.
Did
that work, years. Or it was a backlash on it?
I mean, I think it worked for some folks. I don't think it was super popular. Most people kind of just wanted out. But it probably kept some money from going out the door. But yeah, I mean, for me, the experience was, I don't think I knew anything about hedge funds beforehand. And then I kind of joined this group and was exposed to, this whole world of hedge funds that I found sort of endlessly fascinating. And that I kind of, came back from that internship with my head spinning, like, I've got to figure out, what I even just experienced and what that all was.
You kind of went into the eye of the storm of like the craziest, like, hedge fund scandal or fraud scandal or pyramid scheme in like the last 20 years or whatever it was.
It was pretty nuts, but I thought it was cool being able to. I thought working for a fund of fund was really interesting, in that you could kind of, as you dug into the portfolio, there was 30 different hedge funds in each portfolio that were all sort of employing different strategies, working in different geographies, and all had these like weird names that were, like a Lord of the Rings reference or this reference. And I just like, it felt like this whole Pandora's box of this world that I just, really knew nothing about. And the more that I dug into, one fund versus another fund, the more I wanted to kind of understand how it all worked and what the different investment strategies were.
That was your junior
and
year?
all of that. So
I guess this was one of the 6 months co-op.
Yeah, this was like maybe my third year of the 5 years of undergrad.
And so what did you have one more co-op left?
I did have one more after that. So I knew I wanted to, of the two, I liked the second one more, and I wanted to kind of stick in finance. And I took a position, my third co-op was with Goldman, kind of on their prime brokerage team in the securities lending group. So I was in a kind of client service function on the sec lending team, which was also kind of a quirky, obscure, part of the prime brokerage world.
Yeah, explain to the listeners who don't know what prime brokerage is, just and then what your specific group did, because I think for me it took me a while to figure out what this was.
Yeah, I mean, I think of prime brokerage really as just like hedge fund services, brokerage for hedge funds and big trading outlets.
So you're helping them execute trades. You're helping them execute trades. Do what? Do what types of services? So like that specifically, like actually take positions.
Well, yeah, specifically in securities lending, like you're kind of a middleman between borrowers and lenders of securities. So on the one hand, our clients were, the JP Morgans of the world, the MFSs, like big mutual fund houses that essentially, if they wanted to, they could lend out individual stocks in their portfolio through a securities lender like Goldman to people who wanted to borrow them on the other side, which is mostly people looking to short sell. So you're kind of sitting in between mutual funds and hedge funds. So you're a broker kind of facilitating, allowing those mutual funds to earn, an extra 10 basis points or something like that on a security when as a hedge fund on the other end is borrowing it so they can
short it,
sell it, hope that it goes down. Yeah. So that they can short it. So kind of an interesting space. Again, something I knew like nothing about, but was good to get that kind of like big investment bank type of experience. And kind of an interesting seat to be in. It was cool that you got to see the different rates that different securities were going out at. So for instance, if there's a stock out there that everybody is looking to short, that everybody's trying to borrow so that they can short, there's a rebate rate on it, which is essentially what the short seller has to pay in order to borrow it. And some of those rebate rates can be really
insanely high.
Really high.
So like a Tesla right now, what do you think would it be right now if everyone's trying to short Tesla?
I have no idea what it would actually be, but at the time, Sears Roebuck was like the most shorted name, and the amount that people were paying just for the privilege of being able to short Sears was like incredibly high. So it was kind of cool to get to flip through all of those. And
like a rebate rate, what is that quoted in? Like monthly, like interest? You get it like a monthly rate or something, or annual rate of interest? Like, so if you were to say, hey, give me $100 million worth of Sears to short, like they would say, okay, but we're going to charge you 20% annualized on that, or 30% annualized, something like that.
Yeah, I think I'm going to have to like stretch my memory back to remember what these, I think it was probably annualized.
I know this was I know this was an internship, so it's not fair. A decade ago.
Okay. No, it's okay. It's okay.
I'm just curious because I'm just curious how they quote it and stuff like that. So. Okay.
Yeah.
And so would as a prime brokerage, are you getting a quote from the mutual fund and then getting margin, getting like a slight kind of margin on that? So providing the liquidity, or is that how you can think of it? Like that
was that was kind of the whole function of the team. So if you borrowed a stock, you'd have to post cash collateral or securities collateral, and then those would generate, be invested in, I think, money markets and generate a small amount of money, and then that kind of that like the earnings on the collateral would get kind of split between all parties, the custodian, between us, the securities lender, and the lender and the borrower. It's all talking like very small numbers, like really, really small returns for kind of all parties. I mean, I think I had to put together one of the clients' like annual reports, and I think in total we earned them like an extra 7 basis points, like from a whole year's worth of activity. So it's a very low risk, low return type of function that my view has been mutual funds like might as well do it because you can earn a little bit, you can earn a tiny bit on it, but it's not,
Hey, that's 7 basis points if you're talking 100 billion. It matters.
Yeah,
their fees. They could.
But my role specifically was in client service. So my job was basically to put together reports for the clients on like a daily, weekly, monthly, quarterly, and annual basis. So there were different reports, different clients got, essentially every day. So if you're a mutual fund and you want to enter into one of these securities lending programs, you can kind of set different parameters around it depending on kind of your risk threshold. So how much of any one security can be out on loan, how much can go to different brokers.
Makes sense.
How long
did you like it
out on loan.
Coming out of this, were you like, hey, I want to go back to the fund of funds world? That was much more fun. or were you thinking, what else were you thinking? Like, did you even know about private equity, hedge funds, any of this stuff, like by this point, or investment banking? Like, what was going on?
No, I mean, I think, there were good things that I took out of that internship at Goldman, but I think my biggest takeaway was like, I don't want to go work for a Goldman or an investment bank. Like it was, I think I was just working, like 6 a.m. to 7 or 8 every night, which, maybe compared to some other bankers is not, not that terrible, but I just wasn't didn't really find it. Yeah. Yeah. I didn't find it that intellectually stimulating, and I just felt like kind of one very tiny cog in a giant machine, and like I didn't have any influence, or that if I went away, nothing bad would happen. I wasn't that excited about it, and so the second internship, which was more the fund of fund, had me more interested in the investing world. I would say I was pretty ignorant when it comes to like, I didn't really know much about investment banking programs. Like I didn't know much about, management consulting or some of these other more like tried and true paths.
Had you come across Wall Street Oasis at this point?
Yeah, I think so. I just probably wasn't reading it as much as I needed to.
Okay.
But, I mean, one of the benefits of kind of getting to try out those 3 internships was like, I felt like I had a really defined picture of what I wanted to do at that point. So I wasn't necessarily thinking, I'll do a 2-year sort of check the box type of experience and then go from there into what I want to do. I thought at that point that I, had it all figured out, and I knew exactly what career that I wanted to go in.
Like most 22-year-olds or whatever you were at that point. We know, know all as a 22-year-old, right? That's a rule.
Exactly.
So you're coming out, kind of going to the final year. So you're thinking, I want to go more kind of to investing. It's a little vague, but okay. You liked the fund of funds, so you're kind of looking for more of those types of roles. Can I get to a fund of fund? Can I get to it? Were you thinking principal investing potentially, like where you'd actually put the money to work? Were you trying for that?
I was thinking a little bit more. No, I had kind of dialed it in to being a little bit even more specific. So I thought I wanted to go more into like the private wealth management world. So I wanted to work with like individuals and families to, help them, plan for future, invest their capital, like build portfolios, that sort of thing. So I liked investing, but I wanted to go into like portfolio management type of investing. And I wanted a client.
People are going to ask, why didn't you do an internship with Northwestern Mutual? Or or like any of those PW, because like PWM is sometimes considered one of the easier ones to get into. You can do incredibly well, but a lot of it's sales, isn't it?
Yeah.
Isn't it like,
Yeah, that's right.
yeah. So tell me about how
No,
you
I
thought about
definitely
that.
went
Did
to
you
like,
know, did you have your eyes wide open about that? Like when you're thinking, hey, I want to do more private wealth management, go talk to, help families. Did you go in knowing that's what this job was? And tell me how you ended up landing your first gig and how that recruiting path went.
yeah. No, so I learned mostly through the recruiting process. So I went to the Northwestern Mutual like recruiting day. Like sat through one of those presentations, like sat through one I think at JP Morgan too. And there's as I kind of started applying to roles in that field, you learn kind of quickly that it's a commission based job. Like you're not going to make money for your first 18 months to 2 years. The questions that people were asking me was like, what do your parents do for work and can they float you for the next 2 years while you like get this up and running? And how many family members can you bring on to our platform? And I was like, all right, this is feeling really seedy and not at all what I was expecting. So what I kind of realized from there was the low end of the market, so the mass affluent space is very much like that, like on commissions and things like that. But that if you move into like the ultra high net worth space, there's firms that are a little bit more stable that are not have a salaried position, have kind of 2-year programs where that you can go into. And I think there's probably not that many. It's a relatively small world when you start getting into the like investment advisors who manage $50-100 million minimums and up. But that's where I started looking, and where I started having the most traction because I had a little bit of hedge fund and alternatives like exposure and experience. So I basically drilled it down to I want to work for an ultra high net worth RIA that's in New York City, and I kind of had that laser focus and
that's awesome. That's amazing. That's amazing but I guess it's probably because you did the co-ops. I think it really helped you. It sounds like, because most kids coming out, they'll either be like, hey, I want to go this way because, hey, I don't know what else to do. And it pays really well. It sounds like you really gave it a lot of thought, which is kind of rare for that young.
Yeah,
so
I think so.
But you narrowed it down so much. Was there any fear of like, I'm not going to find the job in New York, or like, how did you even go about sourcing these specific ultra high, because those aren't necessarily easy to find, right? Those offices.
Yeah. I mean, at the end of the day, I think I got like extraordinarily lucky. I was applying to everything off of every platform. I mean, I don't think LinkedIn even really had like job postings at that time.
Mm-hmm.
So I was like on monster.com. I was on Craigslist. I was just like, putting portfolio management and investment associate into any search thing that I could find and firing out like resume after resume.
And this was your senior year, so you had nothing lined up.
Yeah.
Within like 9 months, you were like panicking. Yeah. Were you panicking? What was the thought process? I'm gonna have to go move in with my parents.
I wasn't panicking so much. So I was kind of in my last semester of school. I had only 2 classes left in order to graduate, so I had a ton of free time, and so I was kind of just grinding at it and putting a ton of effort into recruiting. This is a funny story, but I was in Boston, and so I picked up a part-time job driving a bicycle taxi in Boston, a pedicab. And so I was literally like, I mean, my days were like taking fans into the Red Sox games at Fenway Park and then spending all night sending out resumes. And so I felt like I was getting enough responses and enough interest based on my resume. Like, having a Goldman internship at the top of it probably wasn't bad for me, coming out of undergrad. Like I felt like I was getting lots of interest, and I turned down a couple of roles that didn't really feel right. How many
places do you think you applied? Like if you count all the applications you submitted on Monster and Indeed, these
I mean, like
hundreds,
maybe, hundreds,
300, 400, something like that.
Yeah, at least probably.
I think it's helpful just to for the listeners to know that. So like
Yeah,
You had a Goldman internship at the top of your resume. You still applied to 300 to 400 places.
yeah,
And
absolutely.
and you
And
kind
I
of knew
mean,
what you were looking for, but you were smart enough to kind of, hey, I'm going to get the reps. Did you, those places you got offers for, did you still do those interviews, or was it just like, yeah, we'll hire you? Tell me about those, the ones you turned down.
no, I still did interviews. They were all kind of, I mean, so there was a couple that were like that more mass affluent, private wealth management
When you
space,
say mass affluent, what does that
where,
mean? What does that mean?
so, I mean, it's like I guess it's like kind of a category in the private wealth management of like, call it
It's
like
not,
1 to 5
it's not ultra
million
high net
dollar
worth.
range.
It's like, yeah, net worth of one
Yeah,
to five. So it's a little more seedy. They're trying to get you to bring in your own family, stuff like that. Okay.
yeah, yeah.
So
Um,
typically more commission, less salary. So you kind
yeah.
of you got some interviews for those types of places. Tell me how you approach those interviews. Were you just seeing it as practice? Where you're like, hey, let me just hear them out? And tell me, did those help you in your kind of final interviews for the places you ended up going?
Yeah, I think so. I mean, I was approaching them, I was approaching everything pretty seriously. And I don't think that I was, you know, overly confident enough to like pull out of processes at that time. Like I was, even if I was like kind of sure that it wasn't something that I wanted, I probably was going to say yes to each interview and then see,
See if you get the
see
offer.
what the package was at the end. And yeah.
Right.
Um, but I was considering the sort of commission side of things. I just didn't really know if that was normal or not. I talked to a couple professors. I had a really good sales professor
Mm-hmm.
in college, and I kind of asked him, "Is this something I should actually be thinking about?" I talked to my parents, and they were like, "It's what you want to do. We can help you," and all that, which is great to have that support. But at the end of the day, it just I didn't, I wasn't expecting to come out and be taking a purely commission sort of job. Like I just don't think that was really realistic.
Yeah. Okay.
And yeah, there were a couple other jobs that were in sort of like hedge fund research. Like there was a third party group that was, putting together their own proprietary hedge fund research and selling it to, different institutions. How that could have been interesting, but the package was like really low. And so I kind of said no to that. It was a
Like
couple,
like
it was a funded
50K
hedge fund.
under 50K.
Yeah, I think it was about like 45K at the time. I remember I made a huge mistake and the guy kind of surprised me in giving me the offer, like right in the middle of the last interview. I was kind of taken aback and he said, all right, he was basically like, how much do you want? And I quoted him a range, but I started with the low number and then he cut me off before I could even say the end of the range and just was like, great. Yeah. 45 sounds good. Like here, here's your offer letter. And, and, when can you start? And I was like, oh, well, let me think about it. So, I mean, there's always situations like that where you get thrown into a negotiation. You have no idea how to
That's
negotiate or what.
that's
Yeah.
interesting. That like that's a pretty aggressive move. I mean, I'm
Yeah.
surprised he thought that would work, or if that's worked in the past. Um,
Yeah.
but anyways, so
It gave me enough of a bad taste to
yeah,
not even counter. Yeah.
yeah. So okay, so you're kind of applying, and then tell me about the place you ended up going, or what type of place it was. To get into specifics, but just and kind of how you progressed there. And actually, what was the
Yeah.
interview
So,
like there? And how did you like show yourself that you were ready for this? I know you had the prime brokerage, you had the fund of funds co-op, so you could talk a lot about that. But were the questions technical at all? Was it more just like, hey, how do you see yourself growing with us? So tell me how you kind of prepped for these, because it's a little bit different. It's obviously very
yeah.
different from like an investment banking interview.
Yeah, I would say the interviews were not very technical. Most of them were trying to gauge like genuine interest in the space. So I think a lot of kids are coming out of undergrad, just blasting out resumes as I was doing to all sorts of different things, and um, you know, not really sure of what they want to do. So I felt like in a lot of cases, my job was to kind of prove to them that I understood the industry, and I understood the role, and that I had like genuine interest in this sort of position.
How did you do
the
that
most
though?
technical
Did you talk about like trades you'd put on? Did you trade personally? Like what did you do to show that you were interested specifically in like portfolio management?
No, I mean, I had a small investment account. I didn't really bring that up in interviews at that time. I felt like unprepared to like throw a stock pitch at someone, and I wasn't gonna, I felt
Pretend.
like maybe maybe I got my hand burnt like one time on doing that, where like I mentioned some stock that I invested in, and they're like, okay, well, give me your 5-minute stock pitch on it. Like and I couldn't even, tell them what the, margin profile of the company was. So it's like, I should probably not try that again. No, I think the most technical questions that, I got in those kind of roles were like, if you had if you were advising your parents on investing their portfolio today, like talk me through what kind of advice you would give them. How much do you think should be in bonds? How much do you think should be in stocks and other things like that? So sort of giving like a thoughtful response, not just, riddling off, the last 10 news stories, affecting the, S&P 500, but more like assessing my, the hypothetical situation of my parents and where they are in their life and retirement and careers and how much risk they should take. Showing some knowledge of that, I felt like
just basically portfolio construction, portfolio theory, stuff like that.
Yeah, asset allocation and that sort of stuff. Yeah.
So what did you say? Like, did you say you're going to allocate it some to commodities, some to bonds, higher percentage of bonds since they're getting older?
I think I don't remember what asset allocation I
you should have just said,
I'm sure
throw it all into stocks, baby. We're in the longest bull run about to hit ever, and you would have been right. But
yeah.
No, sorry, go ahead. So you're
no
something along the lines of a reasonable answer. I'm sure you gave them. Okay. So
yeah, I mean, I think I probably talked a little bit about where my parents were in their career and like would I put they've got a house that's worth X amount, and so they don't need to put anything into real estate in their portfolio because they already have real estate exposure here. Like little things like thinking through their more holistic net worth and asset base was showing you're thinking more holistically and broadly about their whole portfolio and exposure.
Cool. Any suggestions on how people can prep for that or get well versed in that? Is that just more like academic portfolio construction?
I think there's really no substitute for reading the news and just having a little bit of a sense for a few different asset classes and kind of like what's going on in those spaces. So like it might be helpful to know where long-term interest rates are. It might be helpful to know like what the general PE multiple is in the S&P 500. It might be helpful to know like if there's any emerging market, a fact or two about some emerging markets that you might think are interesting, just to kind of get a sense for where things are in the business cycle and demonstrate that you understand how different asset classes will behave in different market environments.
Okay, quick game. Quick game. Longer, short Tesla. Go. Just kidding.
I'm still long. I'm probably long.
I am too. I don't know. I know this valuation's crazy though. I agree. I'm long the business. Long term, very long term. Short term, probably short.
Yeah.
But anyways, okay. So you were at this. You eventually got a role right in portfolio management. You were at the firm for quite a while. Tell me how you progress. Right. Tell me a little bit how you progress there. We're kind of running out of time a little bit, but I don't want to keep you too long. But tell me how things progress there because you did make a pretty big move. And tell me how that came about. How you kind of moved up an organization like that, and it was an ultra high net worth portfolio management.
Yeah.
Correct. Okay. So tell me about what that was like.
Yeah, so I mean, I kind of found a perfect home for me. Like, yeah, with such a laser focus on what I wanted to do, I found like exactly the right shop to go join. Which I, think back on how lucky I was to kind of land there. And then when I did, I stayed basically as long as I could. So they had a sort of 2 or 3 year analyst program, and then a 2 or 3 year associate program. And then after that, it was kind of, you kind of have to move on. And most people kind of go to business school after that, or try to find something else. So I started in the portfolio management side of things as an analyst, and it was pretty much exactly what I was hoping for, exactly what I was expecting, like sitting across the table, or in some cases going up to some rich guy's house on the Upper West Side in Manhattan, like with my boss, and presenting his quarterly returns, and like watching my boss talk through incredibly deeply and knowledgeably on like every hedge fund, private equity fund, venture fund, like in its portfolio, like able to explain the returns for every single line. And I thought like this is a pretty cool space to be in. So I really enjoyed it, and I loved that I got, going from not knowing who my client was at Goldman and being pretty sure they didn't know who I was, to sitting across the table from a client, was 90% of like what I was looking for, to get that kind of that connection. So, my first goal joining was like, I just want to keep my head down and get promoted to associate, is, make it to the associate level. It was kind of like a up or out type of situation, where if you weren't getting promoted to associate at the end of 3 years, like you kind of had to move on. So
how do you perform well in this type of role? Like, you just make yourself useful, help with analysis, that type of stuff? Or like, are there programs you guys are using that are like internal? Just, it's so opaque to me, like how you deal with this. Like
everything was in, so there were some internal programs, but everything was like mostly in Excel. And honestly, like as an analyst, your job was to like make sure all the numbers in the client's report at the end of each quarter were exactly right. And so honestly, when I was starting, we'd get, because hedge funds report numbers in so many different formats and through different portals, and some were just mailing their, the monthly statement directly to us. So honestly, like I'd show up and I'd have a pile of mail on my desk, and I would open it with a letter opener and plug the numbers into the computer, so that at the end of the quarter, I could like build the whole report for the client. Luckily, things have like progressed. This sounds like I was an analyst in like 1996, but
this was less than a decade ago. Everybody who's listening here, this is not that long ago. Okay, so why was it so archaic? Things have progressed, and they now send it electronically.
Yeah. I mean, I think it was archaic because there's not a ton of ultra high net worth investment advisors out there who are investing across hedge funds, private equity, venture, real estate, like all these
getting them into
types of investment vehicles.
Yeah, getting
them into one investment program was pretty hard. And there's a few different technology companies that are still trying to figure out that problem, and like nobody's really solved that one yet. Like
there's only like probably like 10,000 of these ultra high net worth like people in the country or whatever. If you're talking like 20 million plus, I don't even know what level you guys were talking at, but
no, I mean, there's probably like 30 firms in the US that are like, that have a significant, probably have like more than 5 billion in assets under management, and are focused on that like $100 million and above space.
Right.
So yeah, it's not like a super deep market that if you built software to do this, and you kind of have to get every hedge fund and private equity funds to like all use you as well and march to the same beat. Like it's not super realistic. So honestly, like the 2 years as an analyst or 3 years as an analyst was just like attention to the detail over and over 1,000 times. Like you get this report together, and then you check every single number in it 3 times before you give it to your associate, and they check every number in it twice, and then they give it to the next person. And if you're doing well if your boss is prepared enough to, talk to the client about what happened over the last quarter, and have all the information and insight that they need. So as you get a little bit more advanced in that, building the reports becomes more second nature, then you can kind of use your free time to start digging into the portfolio a little bit more. But in understanding the investments and understanding the asset allocation, but from the beginning, it was really just produce reports and just make sure the numbers were right.
So tell me about this transition you made, and then there was some sort of private equity research type of. Well, tell me about that.
Yeah, so I would say a lot of people at the firm were trying to make a transition from the portfolio management side of the house, which is really like the client facing side of the house, to the research team. The research team was like a 20 to 25 person team, and their job was to scan the universe for investment funds and ideas within their asset class, and either approve or not approve them for our clients to invest in.
It's like a fund of funds.
There was kind of
almost like a fund of funds.
Yeah.
Okay. But for PE specifically, PE and growth equity and stuff like that.
Yeah. So I sat on the private equity and venture desk. So I covered everything from like big buyout shops to sort of mid-market growth equity sort of stuff, all the way down to like early stage venture.
Okay.
We had a separate real estate team, so I didn't cover real estate, but it was global. So we were looking at venture funds in China and in Brazil, and buyout funds in India, and
I'm sure all
Australia,
these funds
like
were happy to take your call and pitch you on their idea.
Yeah, it was an interesting transition going from a client-facing function where you are, you're on the side of the table where you're trying to make sure the client's happy and satisfied and has everything they need, to going to the research side where everybody I met with is trying to raise capital and wants you to feel like the smartest person, and that every question you ask is the best question they've ever been asked. And it was a real reversal. But a comfortable and an exciting place to be. I mean, for me, it was we probably met with one or two different private equity or venture funds a day for the 3 years I was on the research team, and every one of them had a different strategy, different approach, different geography, different take, and I just got to pick the brains of these like brilliant investors and like learn how they invested and learn how they saw the world, and so. That felt like a really valuable place to be and to learn.
So as you're kind of approaching the end of this tenure here, you're thinking potentially MBA. What were you thinking? I know you knew your time was coming up, right? Like you had to move on, MBA or whatnot, but
yeah.
What were you thinking for yourself as next step? Like, were you thinking corporate development? Were you thinking go back to a fund of funds? Like, what was the thought process? Why MBA and why,
Yeah.
You got your CFA, right? So you had already had your CFA.
Yeah.
Right? So why get the MBA?
I did the CFA as well. So the MBA, honestly, I was kind of skeptical about the MBA to begin with. I kind of approached the CFA with, if I can get through this, then maybe I can skip the 2-year MBA and just kind of keep going. But the firm that I was working for made it really easy and to apply to an MBA, and really like encouraged you to. I had bosses that were like, really willing to write my recommendations, and there's some funds available to like take a GMAT course and all that sort of stuff. So they knew that. I think they knew that since they were kicking people out the door at the end of 5 or 6 years, like they wanted to set them up for success. So
makes sense.
I felt like I might as well try and see if I can get into a top 10 MBA program. That I might as well throw out some applications. But I also applied to jobs at the same time. Like once my applications went out, I also looked threw out a couple applications and got into some different processes. And at the end of the day, I was choosing between going to Berkeley for a full-time MBA and taking a role that was kind of similar to what I had been doing at the investment advisory, like very similar role covering private equity and venture for like an investment consultancy. And so I kind of, the two options for me were like, I can kind of keep going down this path if I want, or I can take a step back, really reevaluate, take 2 years and see what it is I want to do. I think, had I taken that other job, I probably would probably have a pretty clear like line of sight to what the next 20 years of my career would be, and it probably would have been more of the same. And the MBA was a little bit more of a question mark, where I didn't think I would ever really regret getting the MBA and having that kind of stamp of approval. And it was a little bit more open-ended, like, let's see where this takes me and what else there might be for me, because I can kind of always come back to this investment advisory world if I want to.
And so how'd you end up in CorpDev? You kind of come onto campus and you're thinking, hey, this is great. Everyone's applying for like management consulting and investment banking. You're like, I don't want that. So tell me what.
Want it.
So tell me how you thought CorpDev, how you narrowed that down, and then tell me a little bit. We'll cut it off after that, and just tell me a little bit about like the recruiting process. How do you landed in there?
Yeah, so it was a little bit of I didn't go into the MBA thinking I want to do CorpDev on the other end. I think what I knew I wanted to do was move from evaluating investment funds, like I moved from evaluating hedge funds or private equity funds, like investing in investors, to actually evaluating companies. And so whether that was a direct investing type of role in venture or private equity or growth equity or something like that, or I kind of just widened the aperture to also include, strategic investing, like corporate venture capital, and ultimately corporate development kind of fell into there as well. The role, speaking frankly, like I think had I been able to successfully make the jump from there into a private equity, a senior associate type of role, or like at a really reputable VC, like I would have probably ended up there. I interviewed constantly for 2 years and made some headway, but ultimately wasn't able to really pull off that.
That's almost impossible.
Jump.
That's almost impossible if you don't have the principal investing experience prior to your MBA. Trying to get one for a post MBA seat, which is super narrow. Like all the kids who already had private equity roles before MBA are a lot of them don't get into the post MBA seats. Like, because there's just less.
Yeah, going to the buy side from an MBA is not super easy.
I've seen it, but I'm like, it's super rare. This is like podcast 130 something. And I've spoken, I think, to 2, maybe 3 who broke in post MBA to like a PE fund.
Yeah. I mean, I felt like,
so it can happen.
The closest that I could get. Yeah. The closest I could get was if I was willing to entertain roles that were basically like associate level roles at like a really good private equity firm. Like I was still applying to those like pre-MBA type roles. And, but even those, like I would get to kind of like the final, like the closing dinner of the process.
Yeah.
And they would be like, and so you're post MBA, you really want to be working with like, 26-year-old kids in the same kind of position as them. And they just kind of, it didn't pass the smell test to them, I think, at that point. So, I kind of widened the aperture a little bit and was talking to some corporate venture capital groups. And the way I actually found this role is I had been, over the course of my MBA, I'd been putting together different, investment pitches for different recruiting processes, whether it was a startup that I thought was really good for whatever reason or a public equity. I wanted to have like 4, 5, 6 different investment, well thought through investment ideas or theses to talk about in different interviews. And so the company I work for now is a publicly traded company, and I started approaching it by putting together an investment thesis for that company. Like I thought this was an interesting, it's a bank. I thought it's an interesting, a bank that was interestingly positioned, and like maybe there's something I can dig into here and put together, a stock pitch for this company. And the more I looked into it, the more I thought, yeah, this is actually a really, really unique company. Let's see what's open on the job board there. And I started applying to jobs in corporate strategy and corporate development at that company. And then going into the interviews, I felt like super well prepared to talk about, the strategy of the company and why I thought it was well positioned and what I thought that they should do, because I had done a lot of, public equity research on it. And that kind of helped me, navigate that recruiting process. Yeah.
Very cool. That's interesting. You kind of started it as like just as a pitch, and you're like, wait, this company is actually really interesting, and you ended up applying there and getting a job there.
That's right. Yeah.
Kind of fascinating. Kind of not the way you probably drew it up, but hey, why not?
No, not at all. Yeah.
Cool. Well, before we call it, anything else, any kind of final words of wisdom you'd share for either your younger self or for the listeners here in terms of how you would you have kind of gone through the same path? It sounds like you had a pretty successful and kind of well-defined path. Like you pretty much knew what you were doing for most of it. It sounds like it. But yeah, I'd love to hear.
I think so.
Yeah.
I mean, I constantly think back, especially going to business school with a bunch of former bankers and former consultants who are having their MBA entirely paid for by the consulting firm. I definitely look back on my path and think, should I have, investment banking wasn't even really on my radar, and neither was consulting. Would it have served me better to take one of those positions that kind of preserve optionality, and that's a little bit more universally understood experience? I felt coming out of the MBA, I still had to explain to people that were skeptical that I had never had a banking experience.
Did you have the modeling chops? Did you have the modeling chops? Did you have the principal investing chops? That type of stuff.
Exactly. Yeah. I mean, and that was definitely an uphill battle to try to, at least with the transition that I was trying to make. The CFA helped a little bit because I could kind of prove to people that I could learn things and, knew how to put my head down and study through some stuff. But if doing it over, would I have preserved optionality coming out of undergrad and taken a more tried and true path? Maybe. With some of the
do you feel like the transition out of MBA has been tough, in terms of the modeling and all that stuff for the actual deals you're looking at? A little bit.
In my actual role now, no, I don't think that I'm expected to do anything modeling wise that I haven't been able to pick up and figure out pretty quickly. They've got templates for everything and someone there to teach you how to do it. But yep. Did I fail modeling tests along the way at private equity funds? Oh yeah, I had one where they gave me a model.
Should have taken our course, man. You should have taken our course.
I should have. I definitely should have.
Little plug in there, a little ad right at the end of the podcast. It's perfect.
Yeah.
No, just kidding. No, I really appreciate you taking the time. So that's interesting. I think I hear that a lot from fund of funds. I think it can be a really fascinating position, and some people you can actually make a lot of money and be at a great firm because a lot of people are only wanting to go to the principal investing. So if you are show dedication and work hard, you can really move up at those firms.
I would say don't.
It can lock you in, right?
It can lock you in, but I think the allocator space, if you can call it that, endowments, foundations, fund of funds, pensions, it's not a space that a lot of people I feel are super aware of. And as you said, you can do quite well. And if you're someone who's very academically minded, and likes thinking really high level about investment trends and ideas and digging into academic research on it, an endowment or a foundation or something like that can be a really cool place to work, where there's if you rise to a certain level, you can do pretty well financially without killing yourself
or having to jump around in 20 different places or anything like that.
Yeah,
for sure, man. Very cool. I think we'll leave it at that. I think that's very wise. Good advice.
Sounds good.
Yeah. Well, I appreciate your time, and let's stay in touch.
Yeah, definitely. Appreciate your time as well. Thank you.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick@wallstreetoasis.com. And until next time.